What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 107, and we have not one, but two special quarterly guests this morning. As always, we have one of our favorite regular occurring guests, khall, joining us remotely, and Kathy brought a special guest. We also have Pablo Giorgi. Welcome to you both. Thank you guys for joining. Thank you for coming back, Kathy, and welcome for the first time, Pablo. How you guys doing today?
Doing great. Thanks so much. You know, as you know, and hopefully the listeners know, I really appreciate this podcast, and I love being a recurring guest on it. And my colleague Pablo Giorgi, he is with Chemical Market Analytics, and I am with Petrochem Wire. We are both a part of OPIS by Dow Jones, and Pablo and I talk all the time. So when the opportunity came for this market review, I was already talking to Pablo about certain things, and I said, why don't you come along? And I'm very happy to introduce you to him. If you don't already know him, world, this is Pablo. Thank you.
Hi, everyone. Thank you, Kathy. Thank you, Ben, for inviting me. I hope everyone is doing great, and it's a pleasure to be here. I've seen the podcast before, and so being here for the first time is really good, and I hope we can have a nice discussion here.
Yeah, likewise. We appreciate it. We've also kept a close eye on the podcast you guys do weekly as well, so it's nice to see more and more folks out there in the podcast world. For those who don't know, so khall is the Global Director of Petrochemical Pricing and also the founder of Petrochem Wire, and Pablo is the Executive Director for North American Light Olefins. So a little bit of overlap, a little bit of differences in each of your day-to-day, but we're excited to have you both. I think it'd be a great recap of what we've seen here for the past 90 days or so as we're sitting here early April, as well as kind of what the potential forecast and outlook is here over the next couple months as folks are starting to plan their Q2 demand and purchasing and supply and all that good stuff. So I guess jumping into it, Kathy, like we always do, what can you give us a little bit of a recap from Q1 or year to date? How's things been going the last couple months here, and what are we seeing out there in the market for some of these things we enjoy talking about, whether it's benzene or propylene or whatnot? How's things going here to wrap up Q1?
Sure. Well, like many of your listeners and you, Ben, we just came back from the AFPM in San Antonio, so that gave some really great on-the-ground feedback. I think that it was unsurprising that we are in a globally low-demand market, and that is, it just highlights the interdependencies we have upon one another regionally. But for my obsession and Pablo's obsession of ethylene and propylene, they're not the easiest products to export. So even if the U.S. is the lowest cost producer, even if the U.S. is long in supply, getting those products in particular out to the rest of the world is sometimes not the most attractive option. So that's where we look to the different downstream buckets of polyethylene, polypropylene, glycols, different solvents, acetyls, plasticizers, all of that stuff. And I know that those things are near and dear to the hearts of your readers and listeners. So, but yeah, overall, I do think that where we ended last year was, I think, largely stability, and stability was the best you could hope for. I understand anecdotally, there are a lot of executive level managers who are saying, what's the good news? The good news is that prices didn't fall as far as we were concerned, at the end of last year. However, when you're looking at ethylene and propylene for this first quarter, we had different stories. Ethylene was pretty stable. So, on a cents per pound basis, we're still circling in the 18, 19, 20 cent range. That's stability. Now, who hates stability? Well, hate's a strong word, but traders and people who like the volatility and speculation, it's not easy to turn a big profit when your movements are 1/8 of a cent within a week. However, for the supply chain, that's pretty good news. On an export basis for ethylene, it is still pretty steady in that the price, you can guarantee the price by and large by the time you get to your destination hasn't changed all that much out of the US. I'm going to pause for a minute, but I'll say briefly that after Pablo comments on the ethylene situation, propylene has a much different story in that we saw prices drop dramatically during the quarter. This affects the forward markets for the propylene as well. So we'll get to that in a minute. But I want to take a pause and get some of our expertise from Pablo. From what I've just said, are there different buckets? I say buckets, downstream markets that you feel are more helpful than others right now in that demand picture? Understanding that nobody's telling a great story, but what are some of the more encouraging stories?
Yeah, thank you, Kathy. So yeah, it was great seeing everybody at AFPM a few weeks ago, and definitely great seeing you there as well, Kathy. It's, for olefin derivatives, it's always about how you move the product better. As you mentioned, it's expensive to move olefins, to export ethylene or propylene, and it's much cheaper to do it with the derivatives. The main derivatives are the polymers, polyethylene and polypropylene. And one thing that is common to all of these products is that recently, especially last year, and in the case of propylene also this year, we overbuilt a lot of capacity, and the vast majority of it in China. A lot of ethylene and propylene capacity, and a lot of polyethylene and polypropylene, and the other derivatives as well. And so that becomes something that the market needs to adjust to. And because it's so concentrated in China, the oversupply, other regions might face some periods of being very long in reflecting the global market, and some periods of being short because they just have some disruptions on either the supply, the demand side. And what that leads to is the need for more trade, but these things don't happen immediately, and we've been having a lot of trade disruptions because of logistics, the Red Sea and the Suez Strait going, or the Suez Canal going through a lot of issues with the Houthis attacking the ships there, in the Panama Canal because of the drought, and then some other restrictions to trade, and that is leading to more volatility globally. So I would say different derivatives have definitely performed differently, but the trade we need to adjust the supply and demand between regions has been a very not behaving the way we would expect, or that normally it behaves. What we have been going through in the last few months, to complement what Kathy said, I would say what has been doing well is polyethylene exports out of the US have been really good. We have advantaged natural gas, really cheap, as everybody has been seeing in the news, which leads to cheap ethane, which is the main feedstock we use for ethylene production in the US. Around 85% of the ethylene today is produced through cracking ethane, and that leads to very competitive ethylene. And therefore, we are exporting a lot of polyethylene, mostly to Asia, mostly to China. What means also that we are running our industry here in the US very hard at high rates, while the Chinese crackers are slowing down. And we keep pushing, and last month, not last month, but in February, the export data just came out in a few days ago, and we beat another record for polyethylene exports, with more than 2.8 billion pounds exported in February out of the US. So that is really something that has been doing good, polyethylene exports. On the propylene side, though, we have been going through a relatively tight market in the US while the global market is oversupplied. So it's a very strange market from that perspective. Derivative prices in Asia are very low, and the market is oversupplied for basically all the derivatives. I would say that, especially in the beginning of the year, some oxo alcohols, 2EH and butanol were doing better globally in terms of margins, but also in China. But the problem is, from a propylene perspective, the volumes are not enough to really rebalance the markets. When we have excess or deficits, we need to move the high volume derivatives, which are polypropylene, acrylonitrile, acrylic acid, etc., bigger volume derivatives. So those trade restrictions really made things look very different from region to region.
Sure. And looking at Q1, so if obviously we're kind of early to mid-April at this point, if we look at Q1 up until, let's say, April 1st, obviously we saw increases kind of steadily on things like propylene and on things like benzene. Obviously things maybe look a little different on some of those today, but fair to say, obviously, as Q1 went on, we saw pretty steady prices moving up on those things.
Yes. So the propylene story, my goodness, it was, I think that propylene exhibited a lot of strength during the quarter relative to demand. But, again, demand is a relative term because obviously the demand for prompt and immediate propylene was pretty strong. This popped the spot prices to almost 60 cents per pound. That is something that, as Pablo and his team do forecasts, the exact number, is always a little bit elusive. So, there might have been room for, yes, there's going to be higher pricing because of this market condition. We see 60 cents. We're like, what was that? But when you don't have that fundamental demand, what I'm talking about is consumer demand. If the demand is coming from a producer who has commitments and their plant shut, that is not the same to me as fundamental demand. So if we have fundamental demand, and as Pablo said, with the polymer grade propylene in particular, what are you doing with it? Making polypropylene that you cannot sell into Asia during this quarter. The price is too low. So it backs up into the system quickly once you get through the outages. So the outages, I believe, had fueled a lot of the sense of panic or the rising price and the strength. And this, of course, translated to the monthly contract price also being higher. The sellers have the advantage. When it's time to set the price, they say, here's the price. You want the product? That's the price. However, what we saw in the second half of March was if you took a week vacation after AFPM, you came back to a 45-cent market. And that was depending on your position, that could be very upsetting, but it was certainly jarring that the market dropped that much within 10 days. And at 45 cents, that was, the way a lot of markets work, and particularly a market toward the end of the month, trying to work out the proper fundamentals of true demand versus supply. And again, the end of the month, you have the opportunity to roll into the next month. What's your state of storage? A lot of opportunities there for speculation. And these are traders. And this is not to say that that's invalid or somehow different type of demand, but traders, more than any other participants in the market, will do technical tests, meaning they will offer and offer and offer just to get that next price. They're not going to wait and not trade and eventually we'll find a new price. They will test and test. So even if we saw days with no trades, we saw 58, 56, 54. Oh my goodness, when will this end? And then when we got to 45 cents, remember that day, Pablo? It traded 9 times at 45 cents. Well, I thought, that to me signifies that's a price that resonates with both sides of the market. So a 45-cent price at the end of March for March was a little dramatic, but something to speak to the nature of the forward markets. And that's not the forecast, but they are related in a way. It's the future sentiment. When we had March up by 60 cents, we had April at 50 cents. So we had some room there. And when March came down, April didn't move so much. So while we're in April in the low 40 cents, we're not seeing that the whole thing dropped. We're seeing that the forward months are it's still we still have the premium on the prompt months, the today market, but it's not nearly as steep as it has been. And I think that jives with the expectations broadly from the analytics and Pablo's team of, are we looking at big upside or downside? Probably less so than we had in the first quarter. But to answer your question, Ben, with volatility in the first quarter, propylene was the disruptor in the US, and any derivative that was following that contract, these are some big swings, that's for sure.
Yeah, no, that's certainly the comment about if you took a week vacation after AFPM resonates, because you came back from AFPM and it was a whole completely different conversation than when we were at in San Antonio for sure. Now, Pablo, does a lot of that resonate with what you and your team are seeing as well? I know you focus on the forward piece a little bit more than kind of looking back in the quarter, but does that match up along with what you guys are seeing on your side?
Yeah, definitely. We saw the market, those higher prices we saw in the market in the first quarter were very strongly related to the supply and demand balances. There were, on the supply side, a lot of supply disruptions, either planned or unplanned. We started the year on January 15 with a freeze that brought down a lot of capacity, refineries, crackers, and PDHs. We had RGP refinery grade propylene splitters that convert refinery grade into polymer grade down as well. One relatively big splitter in Mont Belvieu was down all the way until the end of March. And so we had a lot of unplanned disruptions then. And then we had a few big PDHs, propane dehydrogenation units, that also produce propylene, that went into maintenance turnaround. And so we had a lot of supply disruptions and the market was tight. And as Kathy mentioned, that leads to, people that are offering in the market, companies that are offering in the market, producers or traders that hold inventory, whoever's offering the market can really expect to get a higher price, and they try to. In the end of March, when we saw prices collapsing, we also saw that was very related to the supply and demand balance. When we looked at the availability of supply, it was the first time in a very, very long time when we had just one plant out. Enterprises PDH1 in Mont Belvieu is still down for maintenance for their typical catalyst change that they do every 3 to 5 years. And it's going to come back up by the end of this month approximately. But the rest of the market was all up and running, which is something we hadn't seen in more than a year. And so supply was good, but most importantly, at the end of March, we already had, and we already had in our balances, a lot of maintenance turnarounds for some derivatives, acrylo, polypropylene, you name it. A lot of different units were supposed to go down at the same time that the supply was down, for example, Enterprise that I mentioned. So that was planned, but then we had a lot of unplanned outages in the last week of March as well, and that are still going on. And what that led to, something we didn't expect, was that prices were going to collapse that quickly. But I think it was a little bit of the perfect storm, with more supply than what was anticipated, less demand than what was anticipated, and that made prices look for their equilibrium much more quickly than what I think everybody in the market expected.
Sure. Yeah, absolutely. One thing to touch on quickly, I know, Pablo, it's not as much of a focus for you, but Kathy, obviously for Q1, we saw a pretty big run up in benzene pricing as well. I think we started the the year somewhere in the low $3 range, $3.10, $3.20, something like that. And obviously I believe it was the March contract was about $4.10. So saw a good, nearly a 25% run up on benzene prices, and the spot market seems to be sitting kind of north of that $4 range. What are your thoughts on that market these days?
Well, I think that similar to what we saw in propylene, this was a supply side story. So again, if you had the supply, you win. And I think that that is definitely one of the biggest fundamentals in the domestic benzene market. And also, it depends upon the amount of product that the U.S. sees coming in from Asia, so specifically South Korea. So if those numbers were not so high for the December shipments and the January shipments, if you have any outages within the refining and extraction units, especially due to that freeze, similarly, the suppliers have the upper hand in those instances. My understanding is that when it reaches, again, a lot like a lot other markets, the market keeps testing and testing. Will you pay $4? Yes, I will. We do see that the volumes of the spot trades will become fewer and fewer as the price gets higher and higher for benzene. And then that affects the derivative units as they become less profitable. But, and I always say my lack of depth in the styrene supply chain is well known, but, in general, styrene on a good day is not the best margin out there. So it's challenging even in a good market. So having the benzene get up to $4, this was a problem. So what happens? The correction begins. And that's where at this point, I believe in April, we have, because our price gets high, we attract all the benzene on earth to come into this country, and then the price will correct. At the same time, on the downstream side, different styrene issues and ethylbenzene unit issues, be they either mechanical or economic, react to that high price. So right now, much like with what Pablo described in propylene, you have a high price and it stays there, and then the combination of more supply is coming back and fewer demand options because the downstream units are just not there to receive it. I believe that that's why there's been a little bit of, not a lot, but a little bit of that drop off in the benzene in the past couple of weeks as well. Now, as we know, benzene contracts will settle the week before a month begins or the day a month begins. So you really are getting a sense of, the hangover of a March supply panic that informs your April price. So that's why, we went from like 410 to 403, but I think that already in the spot market we're experiencing some lower prices as this market is starting to self-correct. So globally, we have been the popular receiver because we have made the price so high. But I think that it's a very typical cycle in benzene. So if you've seen this movie before, it is currently playing, called Self-Correction, High Price Imports, and the price, is starting to see that effect. So, in terms of forecasts, I don't do any. And as Pablo and will tell you, he doesn't do a benzene forecast, but there is more downside than upside, is I think, a very safe thing to assume on your benzene for the short term. So what that will play out as during April, as the imports arrive, that'll be the real indicator there. Probably in about 10 days, we'll see what those prices are, and that'll inform where your next pricing will go. But on the styrene side, again, styrene and ethylbenzene have been real interesting because styrene demand has not been so terrific. Polystyrene demand, like every polymer out there, not really so robust. Ethylbenzene, however, has been, over the past year and a half, to me, has been one of the most unexpected market gems that we've seen out there because of its use in gasoline. That historically it's not been a popular or usual gasoline blend stock, but its use as a gasoline blend stock, because it was so economic and it really worked quite well for certain finished gasoline markets in the US, became quite popular, and that popularity has stayed. There have been many times in the past year where there's been a real trough in the styrene demand, and we will talk with styrene producers saying, are you running your styrene plant? And they'll say, technically, but we're making ethylbenzene. Well, why wouldn't you? So driving season in the US is upon us. So that's something where I think that we continue to see ethylbenzene trade at separate prices than styrene. If styrene is, styrene is really trading on a dollars, per pound basis in the low 50s, but we continue to see the ethylbenzene at about $1 above the RBOB futures. So, really in the 350, 360 range, which is very interesting. So again, much like I'm about to get back into propylene, much like the refinery grade propylene, it may not be finding a whole lot of demand from the finished grades of propylene, the chemical and polymer grades, if we're seeing outages in acrylonitrile and 2EH and polypropylene has no export. It's so doom and gloom. But the RGP, the refinery grade propylene, is having continued success into alkylate, into cumene, into general gasoline blend stocks that can use propylene. So that's been keeping prices propped up to that segment of the market, in my opinion. And but it's very separate from chemical demand. Does that make
Yeah,
sense to you, Pablo? Thank you.
yeah, a lot of sense. I think, Kathy, you touched on some very, very important points. And especially in the US, the refining system is the heart of the supply of a lot of those chemicals. And in the case of benzene, very significant. And in the case of propylene as well. Most of the propylene we get, even polymer grade propylene, most of the polymer grade propylene we get comes from refineries. And as Kathy mentioned, octane values, the value that some chemicals have to blend into gasoline and increase the octane, either because you can't reach the 87 that you need to reach, or to make the premium grades of gasoline. That is a market that is very tight, and therefore the octane value is expensive. And we here at Chemical Market Analytics, we do forecast the energy, refining, fuels, feedstocks markets. And we believe this year is going to be a tight year for the US gasoline market again, which leads to a lot of demand for ethylbenzene, cumene, and anything that you can blend into gasoline as an octane booster, as well as reduced propylene production in refineries, and whatever you have produced, directed as much as you can into alkylate, which is also an octane booster for gasoline. We believe starting next year, that's going to change a little bit, with refining margins more focused on diesel, jet fuel, what is called middle distillates, and less gasoline. But for this year, we're still forecasting a strong gasoline year for refineries in the US, and that's going to have an important impact on chemical markets, as Kathy was mentioning.
Yeah, absolutely. Well, so this is the point in our quarterly recaps here where we start to think about what's to come. We have Kathy pull out her magical crystal ball and tell us what's going to happen here over the next 90 days. So I guess starting with things, upstream, like oil and gas prices, kind of what the forecast is specific for those, and then how that trends downstream into things like benzene, propylene, ethylene. What are you guys talking about for the next 30, 60, 90 days? What's some of the immediate things on your guys' forecast for what folks can expect as it pertains to some of these raw materials and derivatives coming into Q2?
Well, thank you. Yeah, my crystal ball is more of a dartboard, but yeah, as far as energy, I always look at, I'm not playing the market, and that's a good thing. But what am I watching? What I'm watching is OPEC. What I'm watching is the driving rates, is the jet fuel rates. So I think that those are a little bullish coming into the next few months, so that you see the crude and transportation fuels chains, get a lot of support. But at the same time, natural gas is the lowest price in the world here in the US. But again, with both natural gas and crude, something that I have begun to watch, because it snuck up on me a few times, is announcements by Saudi. Saudi comes out with announcements saying we are purposing some of our propylene for Europe. We are purposing some of our propylene for Asia. We are striking a joint venture deal with this manufacturing complex. So looking really at the Middle East as looking for news of different long-term supply agreements that will change the patterns of demand for the energy products and the chemical feedstock products. That's definitely on the radar in the longer term sense. As far as the ethylene and propylene itself, as you know, I'm a fan of watching the forward markets, and right now they really are all trending quite close to the current price. So I'm not expecting absent of any disruptions, which of course can happen in the local markets with operations or something like that. But it's really typically quite a calm time for the markets if nothing unexpected happens, as hurricane season doesn't really come into play until July, and most hurricanes will occur in August and September. So we're not going to have a freeze, as far as I can tell. We are not going to see any hurricane activity. That said, there's mechanical failure, but who can predict that? I also think that, especially as we get into April, when we're in the third and fourth weeks, you will see companies come out with their own explanation of what happened, and those are fascinating. You and I, Ben, have talked in the past about certain majors, particularly the European heavy majors, such as BASF. They've already issued notices saying that things are not going as well as things are going worse than we thought, and here's what we're doing to try to give you the best results we can in what they call one of the more challenging markets in the history of their company. So you can't really overstate how challenging profitability could be going forward, and that drives other decisions. When you see an announcement from Saudi saying we're going into a partnership with Lyondell in Europe, propylene related, well, that makes sense because it makes sense on a propylene level in Europe. It's one of the more challenging markets in the world. So, anybody taking an option for low price propylene, that makes sense to me on my very basic level. But those are things that we're watching. And on the aromatics, of course, the gasoline story I think is quite buoyant. And what we've seen in the past 2 summers, to my recollection, is that the gasoline market carried the aromatics demand. Comments from around the world come in saying if it wasn't for gasoline, there would be no demand for aromatics. So that, I don't know if that will bear out with derivative demand being as weak as it could get, but that I think gasoline is giving a fair amount of support already in the chatter. So that's the limit of my knowledge there. But Pablo, I don't know if you want to take us home with some meaty analysis.
Yeah, thank you, Kathy. I basically agree with everything you said. I want to highlight a few things. One, when you talk about crude oil, and everybody knows how important OPEC is in determining the levels of supply. When the prices are high as they are now, typically other parts of the world, non-OPEC producers increase their production, and right now there's a lot of challenges for that to happen. The U.S. producers are very are economically challenged because of the low prices of natural gas that is produced as a consequence. What we call associated gas comes with the production of crude oil, and it's very cheap right now. And Latin America, there's operational issues to increase crude oil production. So I would say in the next few months, the picture is bullish, and OPEC is going to, or OPEC Plus now is going to have a very important role, as Kathy mentioned. On the ethylene and propylene U.S. markets, typically the second quarter is a quarter where ethylene prices are reduced because we come out of the maintenance season, and there's a lot of supply, and inventories increase, and players are forced to reduce rates, and therefore prices and margins decrease. This year, though, we have such a robust polyethylene export market that in our supply and demand balances and forecasts, we are not showing any need of reducing rates, which would mean healthier margins for ethylene producers in the second quarter and relatively stable prices. So a little bit more of the boring markets that Kathy mentioned with stability, but stability typically is very good for the supply chains, as she already mentioned as well. On the propylene market, it's going to remain volatile. One of the reasons is we have very low inventories right now, and so any disruption, as Kathy mentioned, we have obviously operations and reliability baked into our models, but you never know when things are going to happen and how they're going to happen, and um, just the scale of them. So with low inventories, any disruption gets much more, has a bigger impact in prices, so volatility is increased. The other thing I'm going to mention is we're going to have better supply in the second quarter, but refineries are not going to be as high as we expect them to be in future years or as they were pre-COVID. And so that means prices should not collapse. Let's just put it this way, because we're not going to need to move exports to China or anything like that. So the low 40s cents per pound seem to be a good equilibrium point for prices when we look at what the marginal buyer in the market can do with the product. We think long term, the US is very competitive for propylene production and is very competitive in terms of the capacity we have recently installed. But for the second quarter, the supply is still going to be limited to a point where 40 something, low 40s cents per pound is an equilibrium that makes the market balance itself out.
Sure. Well, you guys covered a lot. There's a lot of things you're keeping an eye on, between what the OPEC announcements are, some Saudi announcements, what's happening with driving rates and gas demand and things like that. Any other big things you guys are keeping an eye on here for the next couple months, or are those some of the big ones?
I just think, and Pablo, please chime in. We're always keeping an eye on the news in Europe geopolitically, because the energy prices are still very much affected by that. And European demand is like, that sweet extra gift to the US, because, it is fairly easy for us to get product there. But, when product is abundant domestically and production rates are high, Europe doesn't need as much product, if any, from us in certain markets. So watching Europe is always is something that, ever since the situation in Ukraine began, that is just a regular thing to watch. Is I didn't always know the price of natural gas in Europe, and now I do. So it's like, keep up these habits right now, because we're still in turmoil in certain parts of the world. And
Sure.
again, when we talked a few months ago about the Suez Canal situation and Panama Canal is not under fire. So again, the Suez is something that it's I don't know anybody who could predict what's going to happen in that situation. But any situation that's geopolitical in nature, it stays on the radar.
I would add to that, we're looking at the hurricane season in the
Yeah.
US Gulf Coast. The first forecasts from different companies and organizations that look at this are call for a very strong, very intense hurricane season. So we're obviously looking at that. We also do a lot of risk analysis. The forecasts are good. I mean, the models are as good as the inputs you have. And obviously, not only you don't know exactly the levels of supply, demand, costs, but you also have the events that are not forecastable, right? And so we try to keep an eye to be able to react as quickly as possible to some potential disruptions and the impact that they might have. I would say for this second quarter and even for later in the year, in the propylene market, especially, supply disruptions are still what can affect the market the most. And we're looking in particular at PDHs. Last year, reliability was very poor. And this year, there's still at least one PDH that has some production issues and might need, or actually needs, to have a turnaround, a maintenance turnaround. And when that's going to happen is going to have an impact in the market. So we are monitoring that very closely and trying to react quickly for our clients and the rest of the market. So I think, supply is always something to keep an eye on. But this year, with the hurricane season and some potential reliability issue on PDHs. Those are the things I would say have higher risk in the market for the next few months.
Yeah, absolutely. Well, a lot of good info in here. I very much appreciate both of you making some time to come on the episode. I think there's a lot of great information that people should take in, digest, and figure out how that applies to their individual businesses and demand for the upcoming quarter, and even starting to think about the fall and hurricane season and things like that. So we very much appreciate it. I will make sure we have some links and your guys' email addresses in the show notes down wherever you're streaming episodes here. Where anything else you would point people to get in touch with you, whether it's upcoming shows you guys will be at or just general web stuff, how can or should people reach out and get in touch with you guys?
I think in general, we have, of course, our online presence, which is the opisnet.com, petrochemwire.com, chemicalmarketanalytics.com. But especially if I know you have quite a following on LinkedIn, Ben, that we are also all on LinkedIn as individuals, as companies. So there's a lot of good stuff to find out there, and you can always find me and Pablo, that's for sure. And and thank you very much. And Pablo, if you've not been up to the offices in Rhode Island, that might be our goal in July, because that's the one to be in Rhode Island for. It's the best time of year.
And even better, you escape the summer heat in Houston in July. So I will take that invitation very seriously and make do my best to be there. I would also encourage everyone to listen to our podcast weekly, the weekly Olefins wrap up in our podcast platforms as well. And it's a quick view of the weekly markets.
Right. Yeah. That's every Friday. And sometimes I'm on it. So yeah, it's terrific. But thank you as always, Ben.
Yeah, thank you both as always. We appreciate having you guys on. Maybe we'll have the tag team here on a quarterly basis. I think it's a good mix of having both of you guys on. So Kathy, I appreciate you making the recommendation and having Pablo come on. So as always, thank you guys for coming on. Thank you for the quarterly recap and forecast here. I know we get a lot of great feedback from a lot of our listeners that it's a great way to help plan what's coming up for the next couple months and understand some of these markets and really understand their upstream raw materials and what's happening in the marketplace. So we certainly appreciate it. It's great to have you both on as always. We would love to have you here in Jamestown in person. We've got this great new studio and love to fill it up with guests as often as we can. So you're more than welcome anytime. But until next time, we'll catch you on the next quarterly episode. We'll talk to you guys soon. Don't forget to scroll down to some show notes wherever you're streaming this podcast, as well as both Kathy and Pablo's information if you want to get in touch with them directly. But thank you guys again, and we will see you on the next episode. Material contained on this podcast is provided by the chemical company solely for informational purposes. The information is not guaranteed to be correct, complete, or up to date. The information in the podcast is intended solely as a general education aid. TCC is providing this podcast as a public service, but it is neither a legal interpretation nor a statement of TCC policy. Reference to any specific product or entity does not constitute an endorsement or recommendation by TCC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Views and opinions expressed by TCC employees are those of the employees and do not necessarily reflect the view of TCC or any of its officials. All statements, comments, and opinions presented are made in the context of robust dialogue and freedom of expression. TCC assumes no responsibility for any consequence relating directly or indirectly to any action or inaction taken based on the information in this podcast. While TCC strives to keep the information in the podcast accurate, complete, and up to date, we cannot guarantee and will not be responsible for any damage or loss related to the accuracy, completeness, or timeliness of the information. TCC assumes no liability for any errors or omissions in the content of this podcast. The information contained on the podcast is provided entirely on an as-is basis with no guarantees of completeness, accuracy, usefulness, or timeliness. Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.